If you have physical gold and physical silver in your possession, it runs zero counterparty risk. There was even a recent Bank for International Settlements study that looked at gold as part of the reserves of countries. And they concluded that gold held at home ran no political risk. So there's no counterparty. If you hold it in like an ETF or a piece of paper, you don't really own gold. You don't really own silver. You own shares in a trust. And any contract, that's all it is. It's all this stuff is, the Wall Street stuff, the stock market stuff, it's contract. And any contract is only as good as the counterparty to that contract. And if you don't realize it's a contract, well, even if you do, how many people read all that fine print? And if they know you're not going to read it, guess whose benefit these things are written for? So having gold and silver, having real money outside of the system protects the wealth that you've already managed to accumulate. And additionally, it puts you into a position to take advantage of wealth transfer that happens as we go through this hyperinflationary event. So that, dare I say it, you can end up in a much better position on the other side of this mess than you were going into it. You know, I mean, hypothecation and rehypothecation, if you hold wealth inside their system, the banks can use your equity for their benefit. They can charge you for it, fees. You're taking all the risk, you're paying them all the fees, and they walk away with all the profits. I mean, it's a pretty good gig if you could get it, but it's not okay with me. And I'm sure if people really understood what they were actually volunteering, it wouldn't be okay with them either. It's just that people don't realize it. Well, it's very interesting because SLV, one of those ETFs on silver, had to change their prospectus so that they don't, because they could not put baskets together in the physical silver. And yet you've got spot silver at like 25 bucks an ounce. It's ridiculous. But this is what you can do if you don't have to ever produce the real thing. So I think that, I think in both cases, you know, I really always hate to kind of talk about nominal prices because, again, it doesn't, the pricing on both gold and silver do not reflect the demand, the real demand of gold and silver. So it's an opportunity for us to accumulate less expensively, and I think that's great. I take advantage of that for sure.
Yeah.
In this case, buy the dips, buy the dips as much as you can get your hands on.
Physically.
Because it won't last. It will not last. Well, I think it may already have been having an impact because you notice that when anything major is going to happen, interestingly enough, the spot markets on both spot gold and silver decline. And we've seen that decline pretty incredibly over the last weekish. So I think that this could very well be the setup for Basel III going into effect the end of this month, or parts of it, where gold becomes a tier 1 asset. And remember that really what it's threatening is that whole paper gold and paper silver market. So I think initially, well, we're watching the drawdown. But I do not think that it will last at all because, again, demand has been so high for the physical markets. And once they're gone, it's not like the paper market where you can push a button and create as much as you want. So I think that we should all be taking advantage of it. I know I am. I have not been able to find where they have agreed on a delay yet. And we're not that far away. So, I mean, they could certainly delay it. That's what they do. They postpone and postpone and postpone. I'm not sure whether or not they will in this case. I thought they would, and they still certainly could. But I also think that that's why the price on both gold and silver is being suppressed, at this point. And I don't think that that will last. I think they could definitely postpone it, but I don't know whether or not they will. Who knows? I mean, these are things that are beyond my control, certainly.
Okay.
Well, I think that history shows us that once one system dies, in order to get the public to trust the new system, gold becomes a component of that system. Until then, ultimately, they take it out again. So I definitely do see a strong role for both gold and silver in the new monetary system. And I think that the global currency is most likely to be the IMF, the International Monetary Fund's SDR. And they've talked about having gold as a component of that currency. Because if you look at the evolution of money, then it becomes quite clear. And, just quickly going over that, when we were on a physical gold standard, you had the citizens had control. If you did not like what the government was doing, you could remove the gold from the system and create restrictions, and you had full privacy. Going into the next system, which is the one that is ending now, the fiat money system, well, the experiment was controlling the rate and speed of inflation. But if you took out cash, you still had privacy. In this next system, this is programmable money, where central banks can control its value directly, and you have no privacy. So then you're in full control. I think China is showing the world how to do this, to be perfectly honest with you. So I believe we're going into a full surveillance economy, and we're pretty much there now. It's just this last monetary piece that they have to finalize. I think that the worst is yet ahead of us, that the COVID pandemic was a great cover for enabling central banks and governments to completely debase and remove all value from the money system that's in place. And that's true in Europe. That's true all over the place, certainly in the US. And at this juncture, the currencies have almost no value. So inflation doesn't really work for the governments anymore like it once did.